Mutual funds are a great product for those who have no idea how the capital markets work. Here are 10 reasons to own mutual fund units. Number 1, your money is with professionals. See, when your tooth aches, you go to a dentist. When you have a legal issue, you go to a lawyer. When you feel sick, you visit a doctor. When you need a haircut, you are visiting a barber. Well, then why not go to a professional who has been trained in the science of managing money? You are better off giving your money to a professional rather than manage it yourself. Medical catastrophes can at least be cured. Financial catastrophes can take an extremely long time to recover from. It is dangerous if you begin investing on your own, especially if you have no time to do research and have no knowledge of the financial markets. Number 2, mutual funds are regulated entities. The fund manager can't play around with your money. There are some rules and regulations in place to protect you, just like there are legal systems in a society to protect your best interests. Number 3, diversification. Fund managers are not allowed to put all of your money in just one stock or a couple of stocks that he loves. That is not adequate diversification. There are multiple companies or financial securities in a mutual fund portfolio. That way, your risk is greatly reduced. Even if one of those companies in the fund portfolio goes bankrupt, it wouldn't bother you much because you never had a large stake in the business. Number 4, asset class exposure. Mutual funds can give you exposure to assets that you normally wouldn't be able to obtain. Example, if you want to invest in foreign markets, you will have to go through tremendous number of legal processes to get permission to invest in that market. A far better and a hassle-free way is via a mutual fund. You can invest in your local currency and the rest will be handled by the fund. Number 5, record keeping. When you invest in a mutual fund, you get emails, you get notifications, messages, etc. You might take all of this for granted. However, those bits of information are vital to prove that you are indeed an investor in the fund. Imagine giving your money to someone and having no proof that your money is with that person. What legal recourse do you have? Number 6, index exposure. As an individual investor, you cannot invest directly into an index. It's a complex process and it requires a lot of monitoring. This is easily done by a mutual fund. Index funds are low-cost funds which do not require active management. It's like a machine. If the index goes up 20%, your money will go up 20% too. It is as simple as that. Index funds is an easiest yet the most effective investment you can ever do in your entire life. Over the long run, index funds have the potential to beat actively managed mutual funds. Number 7, various flavors. When you go to an ice cream parlor, you get a menu. You can order all kinds of ice creams there, right? Same is the case with mutual funds. What do you want to invest in? Large cap, mid cap, small cap stocks, debt markets, gold and silver, foreign companies, maybe mining companies, or you want banking sector, you want value stocks, you want growth stocks, you want hybrid funds. Just take a pick. You will most certainly find what you are looking for through a mutual fund house. Number 8, automatic payments. An SIP, a systematic investment plan, is probably the best invention ever made by the mutual fund industry, especially for people who do not know how to manage their money. An SIP eliminates the need to time the market. No expert in the world can time the market. Just keep putting your money aside every week or every month. It really cannot get simpler than that. And please note, for sophisticated investors who can read balance sheets of companies, an SIP might not be the best option. They are better off managing money on their own. These are people who have chosen to do research and due diligence on their own and who have a better than average understanding of money and financial markets. Number 9, ease of access. Making an investment in a mutual fund is as easy as eating an ice cream candy. Everything is digital now. Gone are the days of filing for all the papers. Nothing is easier today than investing in a mutual fund. Number 10, liquidity. Fund managers are obligated to meet redemption requests. They have to honor your request even if it means liquidating a portion of their portfolio at a loss. Barring extreme circumstances, a mutual fund investment is fairly liquid unless you have invested in a fund which has a mandatory lock-in period of a certain number of years or months. So those were the 10 reasons I wanted to highlight in this video. Remember, this is only for those who are beginners. This is only for those who neither have the time nor the inclination to manage their own money. For them, a mutual fund is like a blessing, especially the index funds. Thank you so much.